Welcome. In this video, ZBCN coin new pump will come. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
Periods in which price movements fluctuate within certain ranges are quite common in the markets. During such times, instead of an uptrend or downtrend, a price structure that moves within a horizontal band and oscillates between clearly defined support and resistance levels emerges. This structure is referred to as a horizontal channel in technical analysis. The horizontal channel pattern, which is clearly observable in the current chart, is a typical example of a market structure where buyers and sellers are in balance and investors are unable to determine a clear direction. However, within this structure, the middle band, often located precisely at the center of the channel, plays a critical role in helping determine the price direction. When the price continuously rises toward the middle band within this horizontal channel but fails to break above it, it indicates prevailing indecision in the market. The middle band level is typically where short-term sellers enter and buyers test their strength. Price action at this level often determines the next directional move. If the price fails to break through this level, it may be seen as a technical sign of weakness. However, the more a level is tested over time, the more likely it is to be broken. That is why the possibility of a breakout above the middle band is currently a significant scenario from a technical standpoint. Horizontal channels are seen by many investors as opportunity zones because the upper and lower boundaries of such structures can be clearly identified. In other words, support and resistance levels are very well defined. This allows investors to manage risk more effectively when opening positions in either direction. At present, the price is moving upward within this horizontal channel and seems to be encountering resistance at the middle band level. However, a closer analysis of the price behavior at this level shows that the approach may be supported by greater volume than in previous attempts. This is an important detail that increases the likelihood of a breakout. One of the reasons why middle band levels are so important in technical analysis is that they are often points where momentum shifts occur. If the price can break through this level with sufficient volume and momentum, the area up to the upper band of the channel is perceived almost as a vacuum. That's because there is no significant resistance in that zone. Institutional investors and algorithmic systems in particular detect these gaps and can execute strong trades. This can help the price quickly reach the upper boundary of the channel after a breakout. Moreover, when we examine these types of horizontal channel structures, we often see that once the price breaks the middle band, it not only reaches the upper band, but also tests it and transitions into new trend formations. So this breakout may not just be a short-term target within the channel, but also a signal of a potential trend beginning. Especially if the price, after breaking above the middle band, comes back to test it as support and then bounces off, this confirms the breakout. In technical analysis, this is known as a breakout plus retest and is considered a highly reliable bullish setup. In horizontal channel structures, a breakout through the middle band often signals the end of a period of indecision in the market. This breakout indicates that buyers are gaining control, sellers are losing strength, and the price is turning a new direction. This also leads to a major shift in investor psychology. Investors who were previously hesitant to buy begin to take positions, thinking a trend may be starting once the price exceeds this level. This contributes to the movement being more powerful and supported by higher volume after the breakout. The upper band of the channel is generally seen as the short-term target zone for the price. It is a region where the price previously faced selling pressure and buyers were insufficient. However, when the price heads toward this level after surpassing the middle band, it may show more determination than in previous attempts. Psychologically, investors begin to believe that even this level can be broken. At this point, if volume remains high when the price reaches the channel's upper band, the likelihood of breaking that level and starting a new uptrend increases. In conclusion, the current technical structure suggests that the price may be preparing for a strong upward move within the horizontal channel. Despite several tests, the middle band has held strong, and the price is once again approaching this level, indicating a setup that supports the potential for an upside breakout. If this breakout occurs, the price is highly likely to rise toward the upper boundary of the channel in the short term. An increase in trading volume, positive technical indicators, and bullish market sentiment would confirm this scenario. The key factor investors should closely monitor in this process is how the price breaks the middle band. If the breakout comes with strong volume, long candles, and firm closes, it can be seen as the first step in an upward trend. Such a development would present not only short-term gains, but also meaningful opportunities for medium-term buy strategies. Therefore, the current chart setup could be on the verge of a critical technical breakout that should be closely watched. A breakout through the middle band with sufficient strength could signal not only a move toward the upper channel boundary, but also a shift in overall market momentum. But we can't make decisions based on solely the channel structure. Let's take a look at other metrics too. Stay tuned.
When we closely examine the chart, we observe that price movements are showing strong and decisive reactions around a specific zone. This zone is more than just an ordinary support level. It likely represents a strategic level where not only retail investors, but also institutional players are taking positions. In technical analysis literature, such special levels are prime examples of structures known as order blocks. In the current scenario, the clearly defined structure just below the price is unmistakably a bullish order block. These blocks represent areas of prior strong buying activity, where accumulation takes place before an upward breakout, and often result in powerful bullish momentum. Bullish order blocks are typically zones where large investors or institutional buyers have placed market orders, making them areas of high liquidity. These blocks represent critical levels where long positions are quietly accumulated, where prices experience short-term pullbacks but are prevented from falling further. When the price tests such regions, sharp and sudden bullish reactions commonly occur, indicating that large hidden orders are being activated to support the price. In the current chart structure, we are facing a similar scenario. Each time the price pulls back toward this specific area, near the boundaries of the bullish order block, it receives buying support, which sets the stage for renewed upward movement. These reactions are not only technical signals, but also psychological indicators that the price is finding solid support. Many investors, recalling previous reactions at this level, place new buy orders each time the price approaches, triggering fresh bullish momentum. This bullish order block is especially noteworthy because it marks the origin of a strong upward move in the past. In technical analysis literature, such areas are often called institutional footprints, zones where major players have left a visible influence on price direction. Reactions from these blocks can signal not just short-term bounces, but also the beginning of a potential trend. Institutional investors rarely act just once at these levels. They typically build positions in stages. This continued interest causes repeated buying pressure whenever the price revisits the zone. In this context, the current bullish order block is not just a support level, but a strategic area that can serve as a reference point for determining price direction. From a technical standpoint, the repeated upward reactions from this level confirm the validity and strength of the block. If the price retests this area again, the probability of a similar bullish bounce is quite high. In fact, when such blocks are tested repeatedly, the price often gains strength and transitions into more decisive and sustained upward moves. Another important aspect of order block structures is that price often appears to dip below them before quickly reversing upward. This is known as a liquidity grab, an intentional move to trigger retail stop orders before pushing price higher. If this bullish order block behaves similarly, where price briefly dips toward the zone and then quickly rises upward, it strongly suggests that large players are actively involved. Volume analysis may also support the structure. If trading volume increases as price approaches the order block, it confirms that orders within the block are being triggered and that the price is finding support. Bullish moves without volume are usually considered weak, whereas moves supported by strong volume indicate active buying by market participants. This helps us gauge the strength of the order block level. Beyond these technical elements, order block zones are also critical from a market psychology standpoint. These levels are often viewed as safe havens by many investors. As price approaches this zone during pullbacks, the tendency to buy increases, and the block effectively acts like a magnet that pushes price upward. This influences broader market behavior, leading to more investors entering positions from this area, which in turn amplifies the strength of the move. In conclusion, the current structure suggests that the bullish order block just below the price sits at the core of the bullish scenario. The repeated upward reactions each time the price visits this area confirm that buying interest remains strong. This indicates that investors should closely monitor this level for both short-term buying opportunities and medium-term position planning. If the price continues to hold this block, the bullish potential strengthens further, and previous highs could be surpassed.
The MACD indicator, one of the most widely used technical analysis tools and considered by traders to be one of the most reliable signaling tools, provides invaluable information about market direction, momentum, and possible turning points. The current price chart also shows a significant movement on the MACD indicator. There is an upward crossover between the MACD line and the signal line, especially with the recent candle closures. Such crossovers are considered buy signals in the market and often signal the beginning of a bullish momentum. The MACD indicator consists of two basic components, the MACD line and the signal line. The way these two lines intersect reveals changes in momentum. An upside crossover means that the short-term moving average breaks the long-term average to the upside, indicating that short-term buying pressure is increasing, the market wants to move upwards, and potentially an uptrend could start. In the current situation, the MACD line is also crossing the signal line to the upside, clearly signaling the start of an upward acceleration. The strength of this signal becomes clearer as the distance between the lines widens over time. If the gap between the two lines gets wider and wider, this indicates that the momentum is getting stronger and the price is determined to move upwards. Especially if this widening is to the upside, often the price will follow and start looking for new highs. Pay attention not only to the crossovers, but also to the position of the MACD indicator to the zero line. When the upside crossovers are below the zero line, it often indicates the early stage of a trend reversal. If the MACD line crosses the zero line upwards after this point, this is considered bullish confirmation. The current chart also shows such a pattern, and the upward movement of the MACD strengthens the signal that the price may also make an upward reversal. Moreover, the linear structure of the MACD reflects not only price movements, but also market psychology. A divergence of the lines after an upside crossover indicates that market participants are becoming more and more bullish, that demand is more important than supply, and that a positive pricing trend is prevailing. This indicates that traders are more confident in the upside potential of the price, which leads to an increase in short-term buy orders and higher volumes. Often, looking for support with volume analysis after MACD crossovers creates stronger signals for technical analysis. If trading volume starts to increase significantly after the crossover, it means that the crossover is not a false signal and that buy trades are supported by real investor interest. In addition, the MACD histogram bars crossing into positive territory is considered an additional confirmation signal that the upward movement is gaining strength. In particular, in some cases, the MACD crossover occurs before the price is fully turned up. This makes the MACD a leading indicator. Thanks to this feature, traders can take a position before the price action starts and start profiting from the first wave of the uptrend. Therefore, the upside crossover in the current chart structure is not just a technical detail, but also a strategic timing for positioning. This bullish crossover, often referred to as a bullish crossover in technical analysis, has signaled the beginning of upward price movements many times in the past. This usually means a trend reversal, especially when the price is in a support zone or in a period of horizontal consolidation, followed by a MACD crossover. MACD lines need to go.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.